Good day everyone, hope you guys are all doing well. Today's topic I will be going through on technical analysis using MACD and RSI. So very briefly, MACD stands for Moving Average Convergence Divergence and is calculated by subtracting the 26 period EMA with the 12 period EMA, and that creates the MACD line. And then this MACD line is then compared with the 9 EMA of the entire MACD, also known as the signal line. So all you need to know is the MACD line, there will be two lines which will constantly cross each other, and the points at which they cross are the important points to take note of, as I will share later. Next, the RSI stands for the Relative Strength Index and is a momentum indicator that measures the pace of recent price changes. So I won't talk too much on what they are, right? As you can Google them and read. I'll instead focus on what is important in this video, and that is how to use them properly and how to use them to find high probability setups. Okay. Before that, I'd like to share how do you include these studies into your charts for your broker. So if you're using Thinkorswim, just go to studies, edit studies, and then just type in your MACD, right? MACD here, and then your RSI, and just add accordingly. All right. So along the way, we will use some stock tickers to discuss the technical indicators. So I'll use Apple for now. So right now, you can see that on my Thinkorswim platform, I have my MACD and my RSI set up. Just ignore the volume for this video, it's not relevant. Just focus on MACD and RSI. So these indicators are important because they let you know the best moments and the best signals to buy and sell. And I'll show you how they work. Bear in mind that I also use other signals and other technical analysis like Bollinger Bands and Moving Average 2050. But for the focus of today's video, we can just talk about MACD and RSI first. I'll give you a step-by-step, and then along the way, other videos I'll share other indicators as we progress. First, the MACD, you should look for the cross between the upper zone and the lower zone. The upper zone represents the area above the center line, right, which is the middle line here. And the lower zone represents the area below the center line. When you have a cross in the upper zone, usually it means that, things are going to go down. So you usually see the curve turning down, and it also means that the MACD is giving you the signal to sell. Right, and together with green bars here turning red, right, which further gives you that confirmation. Okay. What we always want to look out for is the quality of our signal. Okay, remember this word, quality. Everyone out there is simply saying, if this line crosses this line, it means that it's a buy or sell, correct? But what they are really missing out is on the key ingredient, right, which is the quality of the cross and where it happens. We want a high quality signal. The high quality of a signal is if the cross happens at the higher level or at the lower level from the center line, right? Because near the center line is usually super neutral and does not give enough strength or price movements for us to realize a decent profit. So sometimes you might see that the bars will switch before the cross of the graph, and the bars are not big. In this case, you always want to just monitor the charts over the next few days and trade high quality signals. A high quality signal usually happens further away from the center line. Next thing you want to do is also always wait for a confirmation, right? So after the cross, for example, before you decide if you want to buy a call or sell a put if you're bullish, or buy a put if you're bearish, for example, you should always be patient and get the confirmation in terms of the direction so they get it right. So I'll go through some examples later to illustrate this point. So that's all for MACD. It's so simple, but I think the key thing is what everyone is missing out on is on the quality of the signal, right? Rather than what it is, right? You want to ensure that now, if you have this knowledge, you always look out for high quality MACD signals, which is the cross, right? At either the upper levels or the lower levels, not near the center most of the time. Next, we go on to talk about RSI. So for RSI, we have three zones, the 70 zone, 30 zone, and everything in between. As you can see here, with the 30 and then the 70 right here. The 70 and above zone usually means that things are overbought, and the 30 and below means that things are oversold. And in between the 30 and 70 is just what we call the neutral zone. Let us look at the overbought zone. Okay, so if we have a look, let's say for this example, above the 70 line, the things will be in red, the lines will be in red, and therefore it just signals that it's overbought, right? When you see that the RSI and MACD are turning horizontal, yeah, or dropping while the stock is continuing to go up, just get ready for the drop, right? This is called a divergence setup. So once the RSI breaks down back to the 70 level, right, and you see the MACD line crossing back down, right, that's where you can see that it'll be usually followed by a drop in the stock price, right? These are golden rules, right? If you use these simple techniques, you will avoid a lot of bad trades and bad lessons. So for example, what I mean is, let's say we have a fairly straight, this is the 70, yeah, 70 RSI. It's fairly constant, fairly straight, fairly flat, not going up anymore on the overbought level. And here we have the MACD cross. You can see, even though the RSI is getting flatter and flatter, the stock price continues to go up, right? So that is where you get ready for the drop. And if the drop actually happens, right, when the RSI cuts down back to 70 level, breaks through it, and then you get a MACD cross, that's where you have a buy signal. Let's say you want to buy a put, right, a bearish signal, you buy a put, or you can sell a call, right, for this trade. So that's how you can analyze. Look for high quality setups for MACD and RSI combined. So the next question I get is what is the time frame? So for time frame, I always look at the 1 day and also the 4 hours because I swing trade. Your time frame depends on what type of trader you are, and as you know, I don't do day trading, right? From an options perspective, I like to do mid to long term for my trades. And for stocks, which is outside the scope of this video, I like to do a long-term approach. But let's say for options trading, I like mid to long-term approach. I never do day trading. So similarly, let's say for this case, for Apple, we look at the 4 hours. Scale down a little bit. 4 hours, let's just look at we look for, okay, let's say for this case, the RSI is going fairly flat, right here, but the stock price is heading higher. So for this case, we know that this will be a divergence setup, right? So the RSI is fairly flat, stock price going up, and you can see the cross of the MACD right here. That's where you get a signal, right? When RSI cross breaks down the 70 level, and then you wait for a while more, and then the MACD crosses, that's where you get a bearish signal for this case, and then you can buy a put or sell a call, for example, and just close the option trade halfway over the next few days or few hours if you liked. Okay, so let us go on with another example. Let's say for Viacom, this is a trade that I did recently. Let's go to the day charts. Okay, so yeah, so scale down a little bit. So for this case, what you want to do is two things, right? Look for the flat, how flat is the RSI after it's overbought, and look for the cross of the MACD. So let's say for this case, the cross is right here. We want to see if it's a good setup. So what we want to do first is, okay, it's overbought in this region. It's fairly flat. Above the 70 is flat, right? And this is the cross of the RSI. So now we go and look at the price. So if we look at the price, we can see that the stock price continues to go up, even though the RSI is starting to go flat, right? And the MACD is starting to converge, right? And hit the crossover point. So this is your confirmation, right? When the RSI crosses 70 level, the MACD crosses down as well, and you start to get red bars, and that's when you enter a bearish trade. So for this case, you can again buy a put or sell a call and reap the benefits, right? So just play around with this. The key thing to understand is you always want to look at the quality of the setup and not simply memorize if this crosses this, it means that it's a good setup, right? You can see we always look at MACD, upper band, make sure it's fairly away from the center line for a higher strength of movement, and the RSI is either on the overbought or oversold region, all right? So the thing to take note that is, you know, you don't need to use 100 indicators, right? You can only use RSI and MACD and you will be fine, but you should know how to use them, right? That's the most important thing. So the next question that people ask a lot is, what about trend lines? Trend lines are actually something that you draw, so it's very subjective, right? You're drawing it, not the market. So unlike indicators, which are mathematical tools used universally by the markets, trend lines are very subjective, so just be careful if you're only analyzing technical analysis using trend lines. Sometimes I also use Fibonacci and Elliott waves, but not all the time. Using some principles and concepts, I do use them from time to time, which I will share them in future. But for start, mastering MACD and RSI is key, and it's also super important. And if you like, just give it a subscribe, or just introduce this to your friends, and we can continue to make nice profits while learning good practices from institutions and banks.